Did you know in October 2024, foreign institutional investors sold a staggering more than 81,000 crore of Indian investments, which was followed by some correction in the Nifty 50 in the last 4 weeks. But why does it matter? Well, I have always been a strong believer in the Indian markets and heavily invested through my stocks and shares ISA in the UK. However, even I decided to sell my Indian ETF investment last month. Therefore, there is a crucial shift you need to know about. So, what's driving this massive sell off? Could your own investment be at risk? Is now the right time to rethink your investment in India? Stay tuned as I uncover the reasons behind these moves and how, as an individual investor, I am tweaking my investment portfolio as a response to these events. First, let's understand who these FIIs are. Foreign institutional investors are large financial institutions from other countries. This include hedge funds, pension funds, or large asset management companies that invest significant amounts of money in various countries around the world. They move their money across global markets, always looking for best returns. When FIIs buy stocks in a country, it can have a big impact on the market. There is also a sentimental aspect to this. When FIIs buy stocks in large quantities, other investors often see this as a signal influencing their own decisions. No one can say for sure why they are buying or selling, but we can make some reasonable guess based on their actions. Most analysts attribute this FII sell off of Indian markets to four main reasons. First off, let's talk about high valuations. Indian markets were trading at a premium valuation this year. That means stock prices were higher compared to their earnings. Sounds good? Not really. High valuation can make stocks expensive and less attractive to investors looking for bargains. But it's not just about the price tag. Investors worry that high valuation could mean lower returns in the future. Therefore, they are pulling back to find better opportunities elsewhere. Meanwhile, markets like China are currently offering stocks at much cheaper variation, making India less attractive to foreign investors looking for better returns. This brings me on to the second reason, that is shift of the global money to China. Now let's discuss the Chinese stimulus. In October, China introduced a significant stimulus package of $1.4 trillion to boost its economy. This move drew a lot of global investor attention. But why does it matter to Indian investors? Simple. Investors are always looking for the best returns. China's stimulus and low valuation made it a more attractive option for global investors. Therefore, money flowed out from India into the Chinese markets. Next up is disappointing corporate earnings in the second quarter of this year. Companies, particularly those in the consumer finance, FMCG, and energy sectors, reported weaker earnings, and that raised red flags about the growth prospects. When earnings don't grow as expected, investors lose confidence. But it's more than just numbers. It's about what those numbers indicates for the future. Therefore, many decided to sell off their investment to avoid potential losses. The fourth factor is global economic shift, which is also playing a major role. Changes in global economic conditions like rising US bond yield, strengthening US dollar have impacted investor sentiment. When bond yields rise, safer investments like bond become more appealing compared to riskier ones like emerging market equities. But it's also about market dynamics, where money flows in response to economic signals. Therefore, investors shifted their focus away from the Indian market. Okay, so we have discussed about the factors which might be responsible for this sell-off of Indian investments by the foreign institutional players. But What are we supposed to do as individual investors in this scenario? I have always been a strong believer in Indian markets, and over the last 2 years, I have invested heavily in Franklin India ETF or FRIN, FRIN, which is an ETF that gives me exposure to most major Indian companies within my stocks and shares ISA on the Invest Engine platform. But in October 2024, I decided to sell my FRIN investment after making a profit of around 33.74% over the last 2 years. What made me sell my investments? The market had become volatile and it was the right time to lock in gains, in my opinion. Since then, the market has corrected further, reinforcing my decision. Therefore, I moved my money to a global emerging market ETF. This ETF includes companies like TSMC, Tencent, Samsung, Alibaba, and still has exposure to the large Indian companies like Reliance, Infosys, and ICICI Bank. If you are interested, you can check out my Invest Engine portfolio, and I have provided the link in the description box below. If you sign up using this link, then you can also earn some referral bonus from Invest Engine. Remember, for investing, your capital is at risk and terms and conditions apply for the referral bonus. So, by diversifying my investments, I am spreading the risk and tapping into growth opportunities across various markets outside India. I am continuing to hold my Indian mutual fund investment, which has been invested from my Indian bank accounts, and not making any changes there. Also, as the Indian markets have corrected from their previous high, recently I have started building positions through actively managed funds which invest in India within my AJ Bell ISA portfolio. So I am still holding majority of my Indian investments and also continuing to invest some more. I am not a financial advisor, and this video is not a recommendation for selling your investments. So please don't go and start selling your own investments in India. If in doubt, then please consult a financial advisor. As a disclaimer, investing involves risk. The value of your investment can go up and down, and you may get back less than what you invested. Past performance is not a reliable predictor for future results as well. So till now, we have discussed about 4 key reasons why investors have been selling Indian investments in October and my response to these macroeconomic changes. If you are thinking about investing in India, it's essential to stay informed about this market dynamics. I would love to know your thoughts on this in the comment section below. Don't forget to like and subscribe to this channel if you found value in this video. Until next time, happy investing.